Hi, everybody. Welcome to this webinar. This is Shane Smoleny from Wolftrader Futures, and we will be getting started shortly. I just want to do a sound check here just to make sure everybody can hear me okay, and then we will get started with our webinar. Special thanks to our moderators, Pat and Ron. I appreciate all the work that you're doing, and thank you to everybody who's coming out today to watch these webinars. I think this is really going to help us understand what's going on with this S&P 500. This is a very interesting time in the market, so these presentations are timely because it gives us a look back into the past history of what's been going on with this S&P. So this is part two. So if you missed part one, I did that last week. Part one was looking more at before the Fed became involved with the markets in 2009. When I say became involved with the markets, I'm not talking about interest rates. I'm talking about the modern operations of the Fed in terms of quantitative easing and all of these other operations that came to life since 2009. So uh, that's what today is going to be about. We're going to talk about the modern era and how that relates to what's going on right now in the market. So if you're new to the channel, please go ahead and subscribe to the video, like the video. Uh, I would really appreciate that. It helps us get going here, and let's get this channel up and growing because I believe we have good content here for you guys that you're not going to see anywhere else. The stuff that I do is mainly original. I mean, there are some indicators that we use that other technical analysts use, but most of the information I'm giving you here is going to be new information that you probably haven't seen before. And the Fed juice is something that we've used, and we actually have a trademark on the Fed juice. So we have a U.S. trademark on the Fed juice. So this is something that has really been performing very well for us across the board on multiple symbols. All right, so if you guys need to get in contact with me, you can reach me at shane@wolftraderfutures.com, or you can go to wolftraderfutures.com, the website, and you can check us out there. YouTube channel, you are on it right now. This is Wolftrader Futures, and the Twitter is at WolftraderFUT1. So if you get a chance, head on over there and subscribe to both of these. There's also a free member area in the website, and that is going to become more important because I'm going to talk about the streaming in a minute. I'm going to try to do some live streaming in the website. I'm working on that. I'm going to explain that in a minute. But you're going to have to be a member or at least a free member to see some of these. So you can sign up over there. There's an email list too you can get on. So I would recommend you get on these three at least if you want to just kind of learn a little bit more about what we do here. So we have multiple services here, and this is just a summary of the different newsletters we have. We have 6 different newsletters plus a service, which is a stock and ETF service. So we have the S&P 500, which is just that, and that is a very in-depth look at the S&P from many different angles. There's a lot of commentary and text on this. The other services are more charting services. The metals focuses on copper, gold, silver, platinum. They all have Fed juice. The energy is focusing on natural gas, oil, heating oil, and gasoline. Currencies are focusing on US dollar, Canadian dollar, British pound, euro, Japanese yen, Australian dollar, and the euro dollar. Cryptocurrencies are focusing on Bitcoin. They're focusing on Ethereum. They're focusing on Litecoin, and they're focusing on Ripple. The accuracy of the crypto has picked up in the last 3 months. So we have been nailing these turns very well in Bitcoin lately. Like, for example, we just got this recent low that just came in on the Fed juice. We had the decline before that. So crypto is increasing in accuracy. So that's a good sign because these have limited data with what we're using. But the Fed juice on the Bitcoin has been like lately in the last 3 months has been very good. We have a Uranian letter, which is dealing with Uranian astrology. This is not so much focused on markets, but on real life situations of people and events and history. And we also do look at transits going on, but it's not a typical look that you would see in terms of houses and tropical zodiac. We look at things a little bit differently here. In fact, a lot differently here. So if you're interested in that, that's available. Stock ETF service. Now, this is not a newsletter. This is a daily service, and it's a charting service. So we show different charts with all different types of indicators to look at: lunar cycles, Fed juice, daily statistics, RSI levels. I mean, this is really a comprehensive look at markets, and I'm going to be putting this together shortly into a portfolio. I wanted to let this go a few months to let these stocks and ETFs go, but they're doing very well. And so eventually what I'm going to do is I'm going to show you what, if you just traded the Fed juice alone, what it would be in each symbol. And so that is going very well. Okay, so I'll be putting together that shortly in terms of track history and performance of these. But these are doing probably better than I even expected on this. This is really becoming a very, very strong service for us. Again, not as much commentary on these. This is more charting. Most of the commentary comes in the S&P, and most of it comes in the Uranian letter. You can get all of these newsletters with the gold package. So if you want to get everything at a discounted bundle rate, you can get all of these for the gold membership. And then we have a platinum membership. So if you like to see live commentary in the day, I give live commentary all day on Twitter. So all throughout the day, just my take on the markets. We start early in the morning. Sometimes we'll go even past the market into the night if we have to. I give you a little more insights in terms of what I'm doing, like what my biases are. And so it's a live feed. So everything comes in here first. The Fed juices come in here live. We have trade services. We do option spreads. We didn't have one this week because we've been focusing on this S&P so much. But we do have spreads, and we've done okay with them. I mean, we looked a lot at Caterpillar. We started with Tesla. We looked at Caterpillar, but yeah, that's there. I mean, something we're going to keep doing. Fast Fed 2.9. This is pretty much, we're putting this on hold right now. It's there. It's just I'm focusing so much on this S&P, on the bigger move that I'm looking at, that I'm not focusing on these right now, but they will be back in the queue in a week or two. I want to see what happens with this S&P first, but it's there. So and it'll be available on multiple symbols, not just S&P. So we have the Easy Timer. Easy Timer is a 24-hour day trading system. Trades little trades throughout the day, S&P and gold. We have a pairs trader that we look at. We look at corn, wheat as a pair. We look at the yen and the pound as a pair, and they're doing okay. I mean, they're making money. They just kind of chug along. Those pairs trades are nothing out of this world in terms of crazy profits, but they chug along. They're profitable. Both of them are profitable, and so that's good. All right, so that's a little bit about what services we have to offer. We do have a lifetime rate lock, so whatever you sign up at, that's your lifetime rate. And the reason why that's important is because as we add more features, typically the prices go up. So we will have a price increase on October the 31st. We had one last year around October the 31st. So if you sign up now, you get that rate locked in. And so I would advise you to at least try it out. I highly advise you to try out any of these services. There's 7-day free trial. You can sign up, look at everything, download the charts, download the newsletters, see if it's for you. This is the time to do it. Just sign up for the free trial. If it's something you want, keep going. If it's not, no hard feelings. But this is the time to do it this month because we're coming up on about less than a month now before the prices are going to be going up. So that's just what's going on there. All right, so disclaimer, we got to talk about this. So trading commodity futures involves risk of loss. Now there's risk of, you can make a lot of money too, right? But you can also lose a lot of money. Past performances are not necessarily indicative of future results. And this goes for any trading system. Sometimes they work well and they stop working and then they pick up again. That's just the way that it is. This is an educational service. This has nothing to do with my firm, Trading Ridge Analytics. This is meant to be a supplement to the book that I wrote with Larry Pesavento called A Trader's Guide to Financial Astrology. And that's what this is. This is a newsletter. This is not me dealing with anyone's personal accounts. I don't know anything about anybody's accounts or their situations. I just send out the newsletter, and that's what it is. Everybody gets the same information at the same time. So I don't send information to one person before the other. In fact, if somebody asks me to add a feature to this, if they ask me about a chart, what I'll do is I'll just send that chart to everybody. So everybody gets the same information. So there's nothing personalized about this for your account. It's just sending this out and you do what you want to do with it. Next thing is a warning about using fragments. I would definitely warn against this, especially when we see something like what happened this week. It's a combination of the Fed info and the cycles. This Fed info can vary from day to day. And we saw this week at the end of the week, the Fed starts surging in the market at the very, very end of the week into that Friday. So if you look at something, like if we looked at it last week compared to this week, it looks completely different. I don't know if that's going to affect the overall fate of the market, but in the short term, the Fed was able to turn it up on Friday, at least for a day. Uh, so, when you can see that coming, it's very different than what you saw last week. So you got to look at the daily updates between the Fed juice and the cycles. Terms of service, I never share information, so that's the main thing I want to point out here. So if you guys sign up for the website, become a free member or anything, Twitter, Facebook, I don't share information. I don't buy or sell lists. I don't send spam emails, none of that stuff. So if you signed up, if you get an email, it's because you signed up. You can unsubscribe at any time. So you're not going to keep getting emails if you decide you don't want, it's not for you. You can just unsubscribe. I mean, each newsletter is 1 month. It's not like a year or anything like that. You can just do a month and that's it if that's what you want to do. The terms of service is really for me that you understand the risk involved, because what I'm showing you here, these are idealized charts, or these are charts across multiple months in terms of what's going on with the Fed. But multiple months, when you put that into your head and the day-to-day fluctuations, it's really hard to see the big picture sometimes. So it can create a lot of anxiety. When we look at a chart, we look at a weekly or monthly charts, it's like, hey, that looks great, but from the moment to moment, the day to day, that can be stressful. So it's risky. All right. News and events. So stock ETF service is running. We have the VIXY going now. This is the new volatility. This is the short-term volatility index. And it started, hasn't been doing too much, but we've started trading with it, or we started showing the signal there. We're trading these vertical spreads. We didn't trade one last week, but we'll probably have some more coming up here. This S&P is really in a critical situation, so I'm just being cautious about those because the volatility is really, really high right now. And so, yeah. The Fed juice, we have the new resolution, and this is the 4.44 resolution. I think this is why the Bitcoin has gotten so good with the Fed juice. And I have two more systems here, the Fed juice 3.0 and the Skynet, and I'm going to create what is called a concentrated signal. It's not quite ready. I'm working on it. I'm monitoring it still. But the idea is that I'll be able to tell you, hey, this is a concentrated buy today. This is a concentrated sell. So for more shorter term moves, I'll be able to tell you these concentrated movements. So that's going to be really cool because it's going to give us shorter term concentrated signals. S&P Easy Timer is going 24 hours. The streaming crypto is going. I will be adding that. I just finished the newsletter. So typically at the beginning of the month, this is when I start my research cycle. So anytime you guys have suggestions or things that you want to see, this is the time of the month to tell me, because I'm implementing now and I'm coding a lot of new indicators and trading systems. I'm working with developers right now to improve things. So probably we'll have Ethereum coming up here on the Fed juice, and I'm also looking into the Japanese yen in terms of Fed juice. So we add things slowly because I want to make sure that they're performing correctly. I don't want to put something up that doesn't work. So I kind of have to monitor these things for a while. So anyway, that's in the pipeline. The October newsletters are out. So I recommend that you check these out, guys. Check it out. You got a 7-day free trial before these price hikes come October 31st. The double lunar cycles have just been incredible, particularly on the US dollar, particularly on the S&P, I mean, you go down the line here, they've been very good. We are working on live streams on the website. So this is important because when we go on Facebook here, this is like a public forum, right? And so what happens is we get people that are subscribers and not subscribers. So I'm kind of limited with the information I can give away. Sometimes I give like basic training type of seminars here, webinars. You guys can ask questions in the chat. But I have to be careful not to give away too much content that's for subscribers. So I'm working on it. I know how to stream video on my site now, but I'm trying to get a chat to go with it. So I'm thinking about doing like Google Chats or Google Hangouts and embedding that chat into the web page. So you would see the stream and then we would all be on the same Google chat and then we can chat in private and then I can give you all the very specifics and you can ask me questions. So I'm working on that. It's not done yet. I know how to stream. Like right now, I could just stream from my website to you guys, but you can't ask questions. So the whole point of this is that you guys can interact and ask questions. So anyway, but I'm working on that. I think we'll get this solved. It's just a logistics thing and what do I want to accomplish and all that. So at the very worst, we would just have to sign on to a Google chat together and we would just chat like on our phones and then it would show up on the screen so everybody can see the questions. So that's part of an ongoing thing of the Google chats and the conversation. Sorry, I'm reading a question here. The question is, where will these alerts be shared for subscribers now? I'm not sure what you mean about alerts. Are you talking about the live stream? Okay. So that's a good question. So if I'm going to make a live stream, probably it will go to the free Twitter and it will go to the Remind app. So I would say like on the free Twitter or on the Remind app or email, I would say, hey, there's going to be a live stream on the website at this time. And then we would probably start slowly, but this way, like if people have questions or if we need to do like an emergency live stream, which I think we're going to need to be doing in the next few weeks because the S&P is looking so dire. That way we can just do it in private, and I can give you the specific details because it's a balancing act here because I want to give good information, but I don't, like I said, I don't want to give away information that's for subscribers. So I know I'm kind of going on here about the news and events, but I just want you to know what's going on with the service and in my mind and how I'm thinking about this. So that's my goal. So I can just be like, okay, everybody hit the live stream now, go to the website, and then we can just talk. And the whole point is interacting. I can post a video to you guys at any time, but you can't ask me questions back. And that the whole point of this is that you can ask me questions back. All right. Stocks and ETF service is now established. I will be posting the history of this with the Fed juice. So these are making money. For the most part, they're all ahead. The question is how far are they ahead? Some are doing a little better than others, but they're all making money. So I'm going to be posting like eventually the profit and loss graphs of all of these in for each symbol, and then I'll put a combined profit and loss graph on there, and I'm going to assume a $10,000 stake in each signal. So just to show you, like the problem is when you focus on one stock, a lot of times, like the Fed just can kind of go into a funk where it just acts weird for 2 or 3 weeks on one symbol. But if you look at all of them, the net is positive on the Fed juice. So that's what I want to demonstrate that to you, that if you look at all of them, it's a basket of trades. It's a pretty smooth profit curve up. Okay, but sometimes like Tesla's been in a funk lately. It's been like in the sell, it's going up, but most of the other Fed juices are sell and they're all going down. But the point is, on the big picture, if you look at all of them together, they're profitable. So rate increase is coming 10/31. So sign up for the free trial. Check it out before 10/31. Lock in your rate, and you can sign up over at wolftraderfutures.com/plans pricing. And that's where you would go and sign up for the free trial. Any questions about that? All right, so enough of that. Let's talk about what's going on with the market crash signatures. So these are the things that have to happen for market crashes, and let's just review this because I'm going to talk about modern era market crashes. Fed internals need to be falling. This is something that has happened in the modern Fed era. Planetary speed index has to be falling. For the most part, Mercury has to be making a station. Venus, Uranus has to be making hard aspects. The planetary speed index has to be one doesn't have to be falling, but it helps. If it falls, the decrease is stronger. If it's rising, the decrease is smaller. Um, it helps to have a black swan event like COVID and negative transits, which we'll talk about. With the 2011 was kind of like the perfect market crash scenario because I was able to forecast that one out months in advance. So these are the past crashes we talked about last time, but let's talk about the Fed quantitative easing era market crashes. So these are the situations that we're in now, and this is what makes things so challenging, and particularly what happened last week because the Fed went all in on Friday. So what happens is you start to get these situations where the market is about to collapse, and then the Fed comes in, holds the line, pushes it back up. But the question is, will the Fed continue this, or will they retreat and come back? And I'll get into that in a little bit because they've shown a pattern of if they can't stop something, they'll kind of step aside, let it fall, and then they'll come back in when things calm down. So that's the current situation right now. Did Wolftrader futures catch the spike in crypto? Yes, absolutely we did. We caught the spike in Bitcoin. It went into a buy. Bitcoin went into a buy on. I know I'm getting sidetracked here. Let me just tell you when this went into a buy. This went into a buy on. Okay, let me see if I could bring this chart over. This went into a buy on 927 on the double lunar, and it went into a buy on 930 on the Fed juice. So let me see. I'm going to pull this chart up. Well, let's see if I can. Anyway, well, we'll get to that. But it did, yeah, it did catch it. It did catch it. At the end, maybe at the end of the presentation, I'll bring it up. So 927, the double lunar cycle went into a buy, and 930, the Fed juice went into a buy. The Fed juice is modeling Bitcoin much, much better now since I increased the resolution by that 4.44 times. So, okay, 2010. So in 2010, we were dealing with the flash crash. So what I'm going to do is I'm going to walk you through in more detail what happened here. This is the Fed internals here, and you can see that before we got this flash crash into here, the Fed internals, this is the Fed juice here, that's what this is here, the Fed internals were already falling. So a lot of times, like we're seeing now, we see this erosion happening where the Fed's pulling back, pulling back, pulling back, pulling back, and then all of a sudden we got this big flash crash down like this. So I'm showing this to you from the perspective of the Fed. Most of the time it models it pretty smoothly, but there are these weird situations like we're seeing now. This Fed internals has been in this cell. This Fed internals has been in a cell since July the 6th. It took a long time for the market to collapse, guys. So anyway, just wanted to show you that. So that's what happened. That's the overall picture of the Fed in that 2011 flash crash, 2010 flash crash. And yeah, so that first checkbox was checked. The Fed was decreasing. This is the 2010 flash crash in terms of the Mercury station. The Mercury stations are here, and you can see that right before we get this flash crash, we're on either side of these Mercury stations. The Venus-Uranus aspect was here also. So this checkbox is checked too. And I'm showing you these charts, and this looks like Groundhog's Day. It's amazing how this just over and over and over and over again, this stuff just shows up. It's like it's kind of nutty. I mean, even when I look at it, I'm like, there's got to be one time that this happened where the market crashed without this, but no, there's not. It's kind of like everything lines up. So here's the flash crash again. This is the Planetary Speed Index now. So the black line here is the S&P. So this is S&P here. And you can see that first you get this Venus-Uranus station here, then you get the Mercury station here on this side of it. And notice that the Planetary Speed Index is already making these lower shoulders here, right? And so there is a pattern here that I want to point out. Just because it hits a low does not mean that the crash is over, because we saw this in 1929, that it comes up to this shoulder, it looks like it's increasing again, and then it comes down for one more move down. So just because that Planetary Speed Index hit a low doesn't mean the crash is over. So that's we got to look at the peaks of it. I'll go back real quick just to show you the 1929. But a similar thing happened there. This was the 1929 crash. Uh, and so you'll see that on this left side here, when you get that Mercury station, the Venus Uranus, on this one here, you get a big swift move down here, and then it comes back up, and it looks like it bottoms here. But you got to look at these peaks here. That's what you got to look at. And then the market plummeted again. And a lot of times this Venus Uranus is right on that big collapse moment. So I mean, we have a lot of these coming from October through December. I mean, I give the specific dates in the newsletter, but this is kind of nutty how this is all lining up again. It's like it's almost unbelievable. I mean, even when I look at this, I'm like, how can this keep this? It's just crazy. Like sometimes I see these astrological aspects, like the Mars Saturn one that shows up in death all the time in charts. It's. I talked about it in a newsletter this month. Uh, we were looking at the Matahari chart, the chart of Matahari. This is a woman that lived a long time ago who was a dancer, exotic dancer. She was a spy, convicted, and she was shot and killed by firing squad. And on the day she died, Mars Saturn was sitting right on the sun, the midpoint. It's like I did other charts too. I used to do tons of charts, but usually when people have accidents like airplane crashes, things like that, the Mars Saturn's sitting right on the sun. And one time I was doing a chart. I used to tutor. I used to run a tutoring business, and I was doing a chart, and students would come in and look at my chart. I'd look at their chart, and so we were talking one time about the day the music died when they had that big plane crash, right? Buddy Holly and Richie Valens, and so I was like, we were talking about the Mars Saturn, and I was like, yeah, that's always there on the chart. Not most of the time when there's an accident. So they're like, well, pick an event. So the kid picks this. What about when the day the music died, when those, the plane crash? And we looked up the charts, and one after the next, each person had the Mars Saturn right on their sun of these musicians. And I just closed the computer, and I'm like, I don't want to look at this anymore. It was creeping me out. Like, this stuff is creepy. How accurate when you start using midpoints, it's really, really accurate. So yeah, this stuff works. You just really need to know what you're looking for. And so there's so much information that, again, you have to know what you're looking for. But if you do know what you're looking for, this stuff shows up. So this is the flash crash again. So this was the next shoulder coming up, and then it went down again. All right. This was the planetary acceleration index here, and this is the high here. This was 2010. So notice that the acceleration was decreasing. It was kind of coming into a low right as it hit the high here. So that first drop was more extreme. But notice that this is coming up. So the crash was not as extreme in 2010. So, sometimes they don't always go together. But when the acceleration is against it, the crash doesn't seem to be as intense. When they're going together, the crash seems to be really intense. So like when we go back to 2008, going back here to 2008, this was the Lehman. You can see this is the planetary. Sorry, that's 87. You can see that the planetary acceleration index was falling, and the planetary speed index was also falling in 2008. They were both falling in 2008. So it's kind of like I said, you're in a car, you're moving. That's the planetary speed, and when you accelerate, it's like putting your foot on the gas. So then you get the bigger decline. So when you get the 29 crash and the 2008 crash, these are moving together. Okay. All right, keep moving along here. So this was just the acceleration index. So, but again, there it is, right? There it is. Mercury station and Venus Uranus, there they are again. And I know for a lot of you, it may be hard to accept this. Like, how can this possibly be true? I'm a rational person. Rational people don't look at the planets. Rational people don't look at astrology. So I know it may be hard to understand this or to wrap your mind around it because people like to pretend like they're rational. Now, but we know back in the 20s when Freud and Jung were doing their work in early psychoanalysis that people are largely ruled by unconscious impulses and instincts. Even though people like to pretend like they're rational, they're not. And so we are affected by these unconscious influences. And you'll see even with politics, like people who have one position now before the election changed, had a completely 180-degree position 6 months ago. It's just because it's with their guy. And they'll try to rationalize it and say, well, it's because of A, B, and C, but no, it's not. It's irrational. You're just in your tribe, right? You're just going to do whatever the tribe does, and you're going to try to rationalize it later. So people are not as rational as they think. Even if you're of a scientific mind, you're just not. And so the more you can understand that, the more you can make rational decisions. You can understand that you have these unconscious influences and biases, right? So that's really important. I mean, I study psychoanalysis. I study uh, studies of the unconscious of Jung and Freud. This is really important with the work that I do because these are symbols of the unconscious. Okay, so these are just reflections of unconscious impulses of people. I know I'm getting philosophical here and going off on a tangent, but all of this stuff is important. Even Freud, the destructive instinct of man, we see all of this come into play when the markets start to go down. I mean, look at what happened in Congress. You talk about destructive influence. Look what happened last week with the bill. All this infighting, right? So we have to understand that people are not rational. Okay, they pretend that they are, but they're not. Okay. Um, anyway, that's another topic for another day. But here it is again showing up. So here is the Venus Uranus. Here is the Mercury station in the 2010 flash crash. All right, 2011. This is one that is close to me because this is one of the first crashes that I ever studied. I think that I forecasted. I forecasted this way ahead of time. Like I'll get out of the way in a second so you can see it, but like I put out like announcements about this like 2 months ahead of time to the exact day that it was going to turn, at the exact day it was going to bottom on message boards and forums, and it did. Now this is one of those bonus situations where the transits are going along with it. So remember I talked about in the list. Let's go back here for a second. You go back here in the list, and we said that, hey, look, if there's a negative transit, this is really a bonus, right? So this is a situation where we had a negative transit and we had negative cycle. I mean, everything. And this was like a picture perfect forecast. And again, I forecasted this like months ahead of time. This was from a newsletter that was before the crash happened, right? This is all stuff that I talked about before it happened. I'm not going back in time and saying, well, look at this map. No, I said this. So this is the graph here. So these are the general, what I call the general combined transits. We're just looking at it's a dynamic look at all of the planets and the angles that they're making. And it showed us at a peak, and this was a newsletter. I said, look, we are here. This is before this big 2011 crash, and we were here, right? And I said, we're going to go down until about August the 9th here, August the 8th, August the 9th. And the market did exactly that. It went exactly down during this period. Now, at this time, I wasn't aware of the Fed, and we can see here that in addition to the transits, the Fed was also decreasing here. So that really helped, right? So this was like picture perfect. This is like everything you want to see in a crash. Okay, it doesn't always come out this nice, but this was it. I also did another one where I looked at the cycles of what's going on up in the sky. So I looked at the transits. So that month I looked at the aspecting planets, and there was like 10 or 11 key transits, and then I put those into a graph. And so you can see here, this is not transits. This is a forecasted cycle chart. And I said, well, here we're here. Here's where it's going, and it went there. So the whole point is, if this stuff works, right? It should work from any angle, right? If it works with the transits, it should work with the cycles. If it works with the Fed, it should work with the Fed. If it works with the Venus station, if it works with the planetary speed index, if it works with the planetary acceleration index, all of them should be saying the same thing if they work, right? That's the whole point of this. It's not like you're picking and choosing certain things. No, they're all saying the same thing because it works, right? This is a bonus, right? You don't always get stuff this clean, but if it works, it works, and they should all work all the time or most of the time. right? That's the whole point of this, right? This was the longer term view of the Fed. This was the 2011 here. So here's what it is here. So here's the 2011. Again, the Fed peaks into here, and then we get this big decline into here, right? And the market follows. So it's all there. There it is. There's your Mercury station, 2011. I remember this too. I was on vacation and I was looking at this on my phone. It was like the market was like, this was a cycle high, by the way. This was like a short term. I'm talking about a lunar cycle. So the lunar cycles, what they do is they don't, a lunar cycle can't catch a crash, right? A lunar cycle is just an oscillator. It kind of goes like this, right? And so I remember that this first decline here goes with the lunar cycle, and then it was in a high, and I remember it was making a lower low, and I was like, well, that's weird. And what happened was the selling just got less intense at this point, and then when that lunar cycle turned, you got a collapse. So in the context of it, the lunar cycle was correct, but the lunar cycle is never going to catch crash because it's just kind of oscillating. Your Venus Uranus is there, so all that stuff is showing up. Again, this is just another view here. You can see here's the Mercury station, as I just showed you. Here's the Venus Uranus. And notice the planetary acceleration here, that the acceleration did kind of bow up here, and notice the market stopped going down at that point, right? So it kind of slowed it down. But anyway, here's the planetary speed index. Here's 3 peaks again. This one was interesting because this one did kind of peak with the final peak here. This is the first one here, second A, B, and C, and then it just collapses here with this planetary speed index on the Mercury station. Here's the Venus Uranus. There it is. This is different out here because the Fed started working with Europe with the long-term refinance operations. So that's like a whole different type of QE that started up out there. But there it is again. Let's go to the next Groundhog's Day here, 2014. Now these crashes, I call them crashes, but they're more like just sharp declines because when the Fed was involved into here, this is post 2009. So obviously we've been in this big bull market. But when you look at this, here you go again in 2014. This is the decline of 2014. Mercury station here. Venus, Uranus here. So they're showing up again right at the peak of the selling into here, and just like we expect them to, because like I said, if it works, it works, right? It's got to work. So we can't expect these things to be 100%, but the fact that this stuff is showing up like this is kind of nutty. Like I said, even I get a little bit spooked out by this stuff when I look at it. But again, you have to know what you're looking for, right? There's just hundreds of thousands of transits when you look at this, but we have to identify the ones that are the most important. And these transits mean different things. I mean, Mercury means motion, right? Mercury is motion. It's news, it's communication, it's flow. So when Mercury is stationary, there's no motion. The data is not flowing correctly, and prices tend to fall when you get in a crash situation. We have Mercury stationed 4 times a year, right? So we don't get crashes 4 times a year, but putting all these pieces of the puzzle together, it's there. Mercury station here. I'm just reading this about the 20-year cycle. Mercury station here, 2014. Okay, so here we are, 2014. So notice same situation, lower peaks here, and then again you get your plunge here, and here it is again. Mercury station, Venus, Uranus. I know this looks like the same chart that I'm showing from 1929, 2008, 1987. It's not the same chart. These are different years. This is just how it is. And this is not a back test. This is not adjusted. This is just as the planets were moving in the sky. So the more you can accept the fact that we're not rational, at our core. Remember, consciousness and evolution is a very relative development. I mean, most of the time, man wasn't conscious of what they were doing, right? They were performing all these strange rituals, and this is when we think about the evolution, even our brain and our brainstem, the way that it grows up, the basic functions are, our breathing and heart rate and all these things are at the lowest levels of the brainstem, and then it evolves out to the cortex where we get into this higher thought. But that's new. So all of this stuff is still with us. It's inside of us. We can't pretend like it's not there, even though we do have consciousness now and we are more rational. But the fact that this shows up like this tells you that we are uh, governed by unconscious influences, or at least the masses are. This is the psychology of the masses. All right, 2015 to 2016. This is another one here. This is a decline here from 2015 to 2016. So I'm going to circle this here. You can see the Fed use was in a mild decline here, and then the market follows down here. Fed use goes up here, market goes up here. So this is not astrology, or this is just the Fed. This is just people pressing a button on a computer and printing money. This is not the astrology part. But you have to look at the two hand in hand. They go together, right? Like you can't get a crash in this modern era without the Fed pulling back. And so this is why I'm really emphasizing this now. But when you went back to like the 80s and the 90s, you could follow this astro stuff and it just modeled the markets beautifully. But now you got to really watch what the Fed is doing to understand this. Here's the Mercury station again. Again, this is not the same chart. This is a different year. I know it looks like Groundhog's Day, but here it is again. I keep choosing the wrong color here. Here we go. So here it is again. So here's your Venus, Uranus here, and the Mercury station up here. And then notice it happened again. There's another Mercury station here and another Venus, Uranus. So it kind of did a double dip here. And so we see that sometimes. So that's one thing I want to point out. I still think we're just in the middle of this right now in this 2021 situation. We've got a big right shoulder extending out in the months coming here. So I don't think we're out of the woods by any means yet, even though the Fed is starting to ramp things up. We'll get to that in a little bit. But again, guys, I promise you, these are straight transits. This is exactly how it happened. None of this is modified. None of this is optimized. This is how it happened. Okay, all of this stuff is all pre-written stuff in the stars in terms of the transits. And so the more you can accept the fact that humans are not rational people, the more you can understand that this stuff does affect. I mean, think about this for a second. When you think about what they're talking about now, when we talk about concepts like quantum physics, and you start talking about, well, the universe could be a hologram, the universe is a simulation, there's parallel universes, there's multiple dimensions, and all of these things that there's now talking about in science, and you can't accept the fact that the planets could affect our unconscious behaviors. Come on, it's ridiculous. And like I said, this stuff is going to be mainstream in 25 to 50 years. I know I talked to Larry Pesavento a lot. He thinks that this is going to be on financial shows in the next 5 or 10 years. I don't know if people are ready for this, to be honest with you. It's pretty hard for people to accept this, but this is the reality of it. And guys, keep in mind too that I have a scientific background. I have 2 engineering degrees. I was a physics instructor. I had good scores when they took these AP exams. I mean, I taught the real thing, guys, the real physics, the electricity, magnetism, mechanics, all the stuff. So I come from a scientific background. This stuff is real. Okay, and I'm showing this to you over and over and over again because there's no way around this, guys. There's no way you can point at this and say, oh, look at here, look at it. No, it's always here, right? So, and this is just why I'm trying to show you guys this, to give you an idea of this, try to bring this into the world. Whether someone else wants to pick this up and move with it or not is another question, but I'm going to bring this into the consciousness of the world, okay? So whether they pick it up in 25 or 50 years or 75 years, whatever, I'm bringing this to you right now, okay? All right, so this is the 2015, 2016. So you can see here that even going back, there was another dip earlier in the year, back here into this 2016. You can see here on this letter A that this planetary speed index falls here, and then the market follows it here. And then there's a second dip over here. Now this one did not have the Mercury station, this one, but it did have the planetary speed index. It did have the acceleration index. But this is, I think, a bigger one here. And you can see here, here's your lower peaks again. So E, F, and G. So here's your planetary speed index falling here. You got the Venus, Uranus here. You've got the Mercury station here. Once again, there it is. There they are together. Groundhog's Day comes back down here. And again, it happens on the left side. It happens on the right side. So that's why I think the situation we're in now is just beginning. I think there's a lot more to go here. And for those of you who are subscribers, uh, one of the reasons why I've been so stuck on this S&P as being bearish is because I think that this is, I'm not so much worried about the day-to-day right now. I just think I'm trying to look at the bigger picture, which is still has a lot of issues. I'm going to show you the planetary acceleration index here. So this one, this is the 2016, 2015, 2016. So again, here's the Venus Uranus. Here's the Mercury station, Venus Uranus. So you can see here, here's your decline again. So this one had both of them working together in this situation. That first decline didn't. Notice the acceleration was going up, but when they both start working together, you had a larger decline there. So that's what's going on there. I'm going to read some questions here real quick. Okay. Maybe time for another book. Yeah, I definitely would like to write more books on this. I want to get this stuff out. I don't know if you guys know, but like I am a big information person. I like to write, and I plan to write many books. I know I just wrote that first book with Larry, but I'm going to write a physics book, another physics book for high school and college students. That's something I'm definitely going to do because I think there's a lot of room for improvement there. But I'm definitely going to write more books on this astro stuff. We got to talk about this. This stuff needs to get out there. Somebody needs to talk about it. So whether, like I said, whether people can accept this now or it's going to take them 25 or 50 years to accept it, that's another question. But I plan on writing a lot of books. Like that's, in fact, I've already started writing a bunch of books. I have them going. It just takes a long time to write books. So, and this helps to do these weekly presentations with you guys and get feedback and talk to everybody. But yeah, that's something I'm going to do for sure. I love to write. I love to teach. I love to be involved with people. All right, 2018. So this was the stress test. I got a question here. What's the difference between the planetary speed index and the planetary acceleration index? Okay, I'll answer that question real quick. So what's the difference? Well, for anyone who has a background in physics or just basic kinematics, the planetary speed index is kind of like the speed in your car. So this is the speed of the planets. And so the speed of the planets affects the psychology here on Earth of people unconsciously. People don't know it, but they do. It does. This tends to manifest in the markets as falling prices. When you're moving in a direction, if you're also moving, let's say you're driving in a car at 30 miles an hour and you're just driving steady at 30. But let's say you're driving at 30 and you put your foot on the gas and you start accelerating faster and faster, it's going to be a much stronger impact. So when you have a decline in the market like this, when you have the speed falling like this, okay, that's one step here. But if you're also, the speed of it is also increasing. So it's like you're in your car and you're going faster and faster and faster. And then on top of that, you're accelerating faster and faster. So you start at 30 and you end at 60. What's going to happen is the markets are going to fall much quicker, right? So this is what happened in 2008. Both of them were moving together, which they don't always. Like sometimes you could be in your car driving at 30 and you could put your foot on the brake and you could slow down to 15 or 10 or stop, right? But when they're both going together, you're going faster and faster and faster, right? That's accelerating. I mean, assuming we're not changing direction. I mean, changing direction is accelerating too. Assuming you're in a straight line and you're going faster and faster and faster, right? It's going to have a more intense effect on the market. So in the 2008, 1929, the speed was falling, and it was falling at a really fast rate. Okay, so speed is, acceleration is it's the derivative or the rate of change of the speed. So it's how fast your speed is changing. So not only was the speed falling, but it was falling really fast in 2008. And so that's what caused this to occur. So hopefully that answers your question. And so let's get back here to to the 2008. Okay, so 2018. This was our friend, Mr. Powell. Mr. Jerome Powell comes into office, and he's like, I'm going to taper. We're going to just, this is ridiculous. I'm going to come in and we're going to pull back. So he does this stress test. So this is what happened. This is the Fed situation. So we had a situation here where he comes in and he's like, well, you know, we're going to start this. We're going to start this and we're going to start pulling back. So right into here. So they start pulling back on the juice. They start reducing the balance sheet, all this stuff. So it starts pulling back, pulling back, pulling back, pulling back. Now notice the market did go up for a little bit, but then eventually it got clobbered here. You see this? So the Fed eventually he was like, wow, this is serious. I should have listened to Janet. I'm sure she was in his ear telling him, you can't just do that. Janet Yellen, who was his predecessor. But this was when we had that Christmas crash, right? So everyone was like, why is the market crashing in the end of the year? That never happens. Because the Fed caused that, right? They're doing the reverse repos. They were trying to take money out of the system. The banks didn't want to raise their rates, right? So the Fed's like, well, you're not going to do it. I'm going to do it. And so they created like this competitive environment to try to get the banks to raise their rates. Eventually the reverse repo, the reverse repo is the Fed says, I'm going to give better rates. And so people go and put their money with the Fed because they get better rates. And so this is a different situation that we're seeing now. What we're seeing now is we had excess reserves on the balance sheet, but this was a different situation. He was trying to test it out, so he got burned on this. Then they started increasing the juice here, and the markets just went right back up. So yeah, that was all man-made stuff right there. Okay. Next slide. So, but what was going on with the Astro? So that's the Fed. I think a lot of, well, some people can accept the fact that the Fed is controlling the markets. Other people are just like, no, the Fed doesn't control anything. The Fed, you know, there's whole books written on this that the Fed doesn't control it, and the interest rates are, you know, the interest rates follow the markets and all of this stuff, and you'll see this written in books. But that's kind of like dinosaur. It's like going to a gunfight with water balloons. If that's what you think, if you think interest rates are the only thing the Fed does, you're kind of crazy. This is modern era warfare of the Fed. This is not stuff that happened before 2009. So you start coming with that interest rate stuff, it's like ancient history. We are into a whole new phase of the Fed. But anyway, they learned the lesson. He learned. I think they were just stress testing the market too. They wanted to see what could the market do, and the market couldn't do very much. Oh, by the way, in the Uranian letter this month, I'm going to be trying to get more videos posted on that this month. I did put more of the planetary graphs in there this month too, but I'd like to focus on stories about people. The Matahari chart was incredible. That woman's chart was just everything in her chart played out in her life to the point, all the way up to her death. It was, so I picked different people in history. It doesn't, I mean, I might look at Marco Polo 1 month, or I jump around in the different centuries because time it's a big continuum, right? This is all an illusion, right? So I look at people, I go all the way back to as far back as I can see in terms of people and personalities, and I study people going back through history. So anyway, Marco Polo's chart is actually very interesting too. We look at that. But the problem is when you get really, really far back in history, sometimes the birth dates aren't so clear. So I get a little bit hesitant. This is the taper tantrum here, 2018. So here's the Mercury station. Notice it did start early here. The Venus-Uranus was here. It starts early, and then it comes again here. But notice there are our friends here. So on top of the fact that the Fed was pulling back, you had the Astro there in that situation. So there's situations where the Fed pulls back, but the Astro is not there, and there's not really a big decline. Excuse me, guys. I got to had to get a drink of water there. All this talking is getting my throat scratchy here. Okay. So Here it is in terms of the planetary speed index. So taper tantrum is consistent with this planetary speed index also. So here it is on A, B, C. Notice you look at these peaks. The peaks are what to look at here. So here's the fall here. Here's the fall here. This was a little bit of a strange situation that it did actually make a low. Here's a peak here, but it actually did finish its decline into a rising planetary speed index here. So that's kind of an exception. But hey, I think the fact that we're 95% of the way here is pretty good. So uh, let's keep moving on here. All right, 2020. This is COVID. This is a weird one because this is a black swan. So we go back up here to our list and we talk about the bonuses here. So the bonus is the negative transits and the black swan. So in the 2011, the negative transits were the bonus. 2020 COVID was the bonus for sure. Now the Fed was starting to taper at that point too. Again, they were already starting to taper into that. So it was kind of like a collision course with the Fed tapering and what happened here. Okay, so here's what this looks like here. So I'm going to show you three letters here. So this is A, B, and C. This one was a little bit different because the COVID basically shut down the global economy. We know this. So this was the letter A here. This is before COVID. This is in 2020, early 2020. And then we start tapering into here. And then this is when the whole Wuhan thing was happening into here. Fed juice was falling, and then the market starts to collapse into here. This was when this big quantitative easing was announced. This is when they said unlimited QE, and the Fed started exploding into here. And this is when I felt very strongly into this point that this was a market low, and I was posting this on Twitter and telling everybody about this, that I felt like, and it's still there on Twitter. I mean, it's a timestamp, but I said this is the low, this is it, because of the Fed. Like it would have kept going down if it wasn't the Fed, but the Fed. Think about what they did. The global economy was shut down, and they turned the markets around. That's crazy. It's incredible. So we need the Fed. I know a lot of people want to. I know they have this whole insider trading thing, and everyone's pissed off at them. But we do need this feedback system. It's kind of like a thermostat on your air conditioner. It's like your air conditioner needs to know when to turn on and off. And your body is the same thing. Your heart rate increases and decreases depending upon what you need, or your breathing rate, or your blood pressure, or you have all of these receptors on your body that react to the environment. That's a natural thing. So as you may think the Fed is artificial, but what they're doing is important because they have to be there to compensate. So, I know people are beating up the Fed pretty bad right now, but especially like Elizabeth Warren came out. So came out against Powell the other day. She's like, "You're a dangerous man." I was like, "Okay, Elizabeth." Senator Warren, I don't know if that's too smart to be doing that, but that's what she wants to say. So, all right. So this is the right during COVID here, so you can see that we had right at the top here. Let me move this down. This was right here at the top. I'm trying to move this so you can see it. I color these green so you can see them. All right, so notice right before we get this big decrease with the COVID decline here, that here's your Mercury station. Notice there's two legs of it. There's the station retrograde and the station direct. Because what happens is it does this motion where it goes back and forth like this, right? So it's got two times where it stops. So this is on the left, this is on the right. And notice during the biggest decline, what shows up? Mercury station, Venus, Uranus. There you go. Once again, Groundhog's Day. And it shows up in the biggest declining portion into here, right in this dead center of the decline, as we would expect. So again, you had a situation here which was really a classical convergence of events. And then when we look at the planetary speed index, so based upon everything that I was just telling you guys, with an event like COVID, we would expect to see both the planetary speed index and the planetary velocity index both decreasing, right? Because it was such an intense decline, right? So let's look at the planetary speed index. Well, here we go again, right? Look at the shoulders here. And here's your pattern again. I'm going to show you this pattern again. So here it is here. A is the peak. Here's your Mercury station. Notice it's plummeting here, right? Markets fall here, right? Then we go up. Now this is interesting again. I want to show you this. The low of the Planetary Speed Index actually happens before the low of the market. It's just this next shoulder that comes up here. You see this here, right? There's your Mercury station. There's your Venus Uranus right there. And then here is your next big decline into here. That's your dead center. That's your dead center collapse of the market right there. So you had all of this stuff converging again. And so there it is. Now, I just said that we would expect the acceleration index to be going down too because this is such a big decline, right? This is serious. So let's look at this. So here we go again. So here's your acceleration index. It's falling, right? Notice the acceleration index falls. It makes a peak over here at this letter A over here. It starts falling, right? And notice it actually bottoms. It's kind of hard to see this, but it's right around here. Somewhere into here is the low, right around B. So here's your Mercury station right at the top here. Venus, Uranus, Mercury station together. And then here is your biggest decline here, dead center. There's the low of the Planetary Acceleration Index. And of course, we had help with the Fed in here. So the Fed came in and helped, which of course we do need the Fed. I would reiterate that again to people. I don't think it would be a good idea to end the Fed. Maybe some reforms or whatever, but the point is the Fed plays a very important role here to coming in. And so that we expect to see that, right? So that there it is again, right? So again, these are exactly as the planets were. This is not optimized. This is, I didn't add or subtract any planets. This is all of the planets plus the Uranian, the trans-Neptunian points. This is how it was before it happened. All right, I know this is getting a little long here. I guess we're about an hour in. So let's talk about what's going on now. So I'm going to talk about what has already happened. And I'm not going to talk about what's coming up because I'm going to leave that for subscribers. But 2021, so this is the situation we're in now. So this is the most recent decline here. So notice that we had the Venus-Uranus situation here. Okay, so this happens right at the top here, and then the Mercury station is here. And we did get that first leg down on this market. It did actually go a little lower heading in, but that's where we are with this. Now, what does this look like in terms of, let me think about this for a second. This is COVID, sorry. Let's look at, this is what it looks like here. So again, here we go. Here's your Planetary Speed Index here, falling. You can see it falling here. Here's your Venus, Uranus. Here's your Mercury station. This is the Planetary Acceleration Index. You can see that we were coming up to a high here. This is a 2021, so it makes this low, it goes up, and then it's coming up to some type of a peak into here. So this is right when this is happening. So this is why I think that what we're dealing with now is probably just the beginning of something. I mean, of course, anything is possible. I'm going to show you one more slide here in a second that the Fed can do whatever they want. But there are limits this time, I think, because of the inflation, because of the political pressure on them, because of these scandals that are going on. I think there's less will at this point for the Fed to come in and go absolutely crazy. But I'm going to show you a chart, which is the current situation now. So let me explain to you what this is. These are the Fed internals, and these have been tracking the S&P the whole way up. So if you go back through, this is February here, so going up here, and notice these are the actual turning points of the Fed internals. So this is based upon what the Fed is doing. This is an optimized trading system based upon the Fed. So this 621 goes into this buy. Now notice all of a sudden here, 7.6, this goes into the sell, right? So, and it stayed there for a long time. Look at this, stayed there for 3 months, right? And so the whole time I was telling people, I was like, this is not going to end well. This is not going to end well because they're pulling back and pulling back and pulling back like this. Meantime, here you had ECB coming in here. You had IMF coming in here with the SDRs and all this stuff. But we did reach a point here where this did start to turn, and it turned violently so. Okay, so this was coming. I could see this coming, and so now we're getting into the astro part of this, right? So this is where I'm saying you can have this delay. If the astro is not there for you, it's going to eventually come to pass. If the Fed is still pulling back like this, it's going to come to pass. There hasn't been one situation since 2009 where this hasn't come to pass. Let me put it to you that way. Now, here's the big question. You can see that the Fed has done a lot of damage here with this big pullback. The Fed started the taper back in July, and I've been telling people this. This is when it started. I know there's talking about December, but this is really when it started. So notice, all of a sudden, you see this huge spike here. You see this big spike up here? This is the Fed is responding. They responded in the last few days. They're going all in. The question is, will they continue? And if they do continue, will it be enough to stop the decline? Those are big questions, and this is what makes this difficult, because we don't know what they're going to do, if they're going to keep trying to ramp up, or they're going to just do one more ramp up and then pull back. They're just trying to soften the landing here. I don't know, but I can measure what they're doing, and I can tell you this. This is what I can tell you. They put a lot of energy in here, from here to here, for this market just to have this one-day bounce here on Friday. It still fell when they were ramping here. So what I always tell people is, this stuff hasn't failed since 2009, but that doesn't mean it can't. So if the Fed keeps trying to ramp like this and the market keeps edging, I mean, they're trying to stall the selling, but if it keeps kind of edging lower while they're ramping up, then I think you're going to have much bigger problems down the road here, because that's kind of the last line of defense here. And how much more can they do of this? I mean, they're going to have to start tapering in December, right? So they're kind of in a strange situation where, people want them to help out, but then they're complaining about inflation at the same time. So they're kind of in a tough situation where they're trying to help out the markets, but on the other hand, they gotta pull back with this. So that's kind of the situation we're in right now. So it's very interesting. That bounce that you saw on Friday, that was the Fed. That was 100% the Fed. I know that there was this news about the COVID drug and all of these shorts covered and blah 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 and all this stuff, but this was in the making for a few days here. The Fed has been really ramping up here. Now again, the question is, do they continue to go like this? I don't think they will, based upon the December taper. That's my first thing. And then a lot of times too, I tell people this. I've noticed this before with the Fed. They're very smart with what they do. If they feel like they can't stop a rush of selling, they'll kind of pull back. They're in this to win the war. They don't care. Like they will feel like, if they feel like they're putting too much effort into this, they'll kind of step back and then wait for their next opportunity, because they're going to come back again. So if they can't stop it this time, they'll come back and they'll come up with some new thing. And if this gets really bad, they'll come up with something new. I think they're trying to help the markets. I think they're trying to be a positive effect here. And I think maybe this stuff gets out of hand with the quantitative easing and it gets too much, but they're trying to keep things stable. Just the question is, again, will they be able to? There's been a lot of damage done here. This pullback here that we've seen, usually when you see something like this, it shows up for months. And we've just started in this. So usually this shows up for 3 or 4 months when you see a pullback this severe. So even if they spike this back up, the best case scenario I tell people is a sideways market, right? That's the best case scenario. When you looked into the past and you see the Fed pull back like this, the best case is usually kind of a sideways market for a few months. That would be the best case scenario. But we've seen situations before where it can get worse than that. So that's my presentation for today, guys. I hope you enjoyed it, and I wanted to show you, what's going on in this current era with the market crashes and the Fed. And those of you who are subscribers, I will be putting out much more detailed forecasts and information this weekend in the weekend update video. That stuff is there for you too. If you guys want to go check it out, if you want to check it out for the free, get a free week trial, nothing to lose there. And you can do this before October 31st when the prices go up. You can go to wolftraderfutures.com/plans pricing, or you can reach me at shane@wolftraderfutures.com, website wolftraderfutures.com or fedjuice.com. Remember, we have the trademark on the Fed Juice, so there's nobody else that has this. And I just showed you, I think, in great detail, the power of this stuff when you want to try to improve your forecasting of this market. So YouTube, you guys are on Wolftrader Futures. If you're just joining us, there will be a replay of this webinar, so you can go back and look at it. I would appreciate it if you would subscribe to the channel, give it a thumbs up. That would be great. Also on this Twitter, at Wolftrader FUTU1, I do post a chart of the day each day, and I give updates, and I tell you when things are posted and when information is posted. So, trying to end this around an hour. I think we went a little over, but I appreciate everybody sticking around. And if you have any more questions, go ahead and ask it. I'm going to read one more. I'm going to read a couple more questions here before we move out here. Always a good question. How much does the Fed get involved to offset astrology? I don't know. I don't know what they're doing. My guess is that they are aware of these cycles. Remember, J.P. Morgan had a zodiac painted on his library. This was commonly used back in those days to forecast markets. I think now it's a little trickier with the Fed. I think they are at least aware of the bigger cycles. As much as people don't like the Fed, a lot of times these are the smartest people on the planet. I think financially, they get the best minds together. And so I know people may disagree with that, but they know what they're doing. So my guess is that they are very aware of these cycles and even if it's just a market cycle and they don't call it astrology or planetary speed, I think they're aware of what's going on. They know very much. So that's basically it, guys. So any more questions here, guys? I appreciate you coming out here, and I like the interaction of this a lot. So like I said, we are going to be working on getting some live streams on the website. So maybe we can just head on over there at some point, and then maybe we'll be on like Google Chats, and that's how we will communicate. But I don't want to just broadcast to you guys. I want to be able to interact with you guys too, because I can just do a video if I want to broadcast to you guys. So that's basically it. So have a great weekend, everybody. I hope everybody stays safe out there. And for those of you who are subscribers, look for the S&P market update tomorrow. And those of you in the Uranian newsletter, I am going to be doing more astro type videos this month to talk about the chart that I did this month. And so stay tuned for that. It should be really, really exciting. All right, guys.